Over the past 6 weeks, I shared with you various aspects of investing in gold and silver, from why it's more important than ever before to have this asset class in your portfolio, to 3 common ways you can invest in precious metals. If you haven't watched those mini training videos, make sure you do. And today, I'm going to talk about interest rates, inflation, price of gold, silver, and your savings.
Grow your wealth, live on your terms.
Welcome to the Wealth Building Tips and Strategies mini training series. Thank you for tuning in. I'm Millen Livis, financial independence mentor for professional women who are determined to create financial independence in their lives so they have more choices and enjoy more freedom. Today is our last mini training in the series about investing in gold and silver. Gold is a form of money. It stores value over thousands of years. It keeps up with inflation of paper money, also referred to as fiat currency, although often with substantial volatility. The price of gold is affected by multiple factors. However, real interest rates are some of the major factors that affect the price of gold. So what are real interest rates? The real interest rate is the difference between a safe investment, like a treasury bond, for example, and the current inflation rate. During times of very low interest rates that we experience currently, the interest paid on our saving accounts and treasuries may be lower than inflation, the rate of inflation, which means that people who are saving diligently are still losing purchasing power. And so, like I said earlier, interest rates play a major role in gold prices. However, there are other important factors that influence the price of gold and silver. Higher demand for gold usually leads to higher prices. Lower demand for gold usually leads to lower gold prices, as well as silver. So, supply and demand, law of supply and demand. Also, gold price performance is impacted by volatility in the financial markets. When investors get scared, they often turn to gold and silver to drive prices up. That drives prices up. And so it's wise for savers to hold some gold and silver because it keeps up with inflation and maintains global purchasing power over the long term, even and especially in the event of some catastrophic experiences like political instability, economic instability, or weather-related catastrophe. So holding all your savings in fiat currency that is currently paying negative real interest rates, it's just not safe anymore. Paper money is losing purchasing power in front of our eyes. Most of us learn from our parents that cash is king. Agree? I know I learned that. But our parents lived in a different time when money was backed by gold. Unfortunately, it's no longer. And so when savers can get a decent real interest rate on their saving accounts, interest rate that is above inflation, then and only then the attractiveness of holding gold will diminish. Therefore, when deciding how much gold to own in your investment portfolio, your expectations of future real interest rates should be factored in. Next, let's talk about investing in silver. I mostly talked about investing in gold, but silver is the closest cousin to gold. The old saying is that silver is the poor people money. It's much less expensive than gold, yet also historically holds value as real money. The good thing about silver is that it's more volatile than gold. The bad thing about silver is that it's more volatile than gold. In other words, opportunistic investors can make a lot more money from investing in silver bullion, silver coins, silver ETFs, or silver miners, or lose a lot of money if they're not patient. Remember, market volatility is a good thing for patient, long-term investors because volatility presents opportunity. The bottom line, investing in gold and silver is an excellent store of value. It's like indestructible saving account. It's also a great risk management tool because precious metals are a separate asset class from stocks and bonds and are partially uncorrelated with stock market instruments performance and have their own unique risks and opportunities. This makes them particularly suitable for using as part of your investment portfolio diversification and hedging strategy. If you perceive investments in gold and silver as the way to hedge risk in your portfolio, the conservative recommendation would be to have 5 to 10% of your portfolio value in gold and silver. If you perceive gold and silver as real money, you can go for much higher percent allocation into gold and silver asset in your investment portfolio. As I shared with you in this mini training series, there are many ways to invest in gold and silver: physical coins and bullion, precious metal ETFs, and investing in miners and royalty companies. And if you want to invest in the stock market successfully, it's wise to be a contrarian, like Warren Buffett, for example, and buy stocks when everybody is selling out of fear. Most importantly, buy when the stocks are cheap relative to gold. And then you sell stocks when they become expensive relative to gold. So you return to owning gold and silver. In fact, I like to follow Dow to gold ratio as a measure of stocks expensiveness. And right now, this ratio is still high, although the trend of this ratio is down, which tells me that stocks are still relatively expensive. Okay, that's all for today's mini training, and it concludes my mini training series about investing in precious metals. Now, we're not done yet. If you are anything like me, a woman who values freedom above all, a woman who is done with waiting, hoping, and procrastinating, a woman who is serious about never having to worry about money again, let me help you identify your financial freedom number. This is the amount you need to have to be free to do what you want in your life without needing to work. Once you have your financial freedom number, we can start mapping out your custom pathway to financial freedom being your reality instead of just a pipe dream. I only have 3 spots open at this time. So grab your spot for this 50 minutes one-on-one private call with me right now. Okay, so again, you can book your call at https://speakwithmillen.com. Speakwithmillen.com. Thank you for tuning in today. See you next week for the next episode of Wealth Building Tips and Strategies mini training.
Grow your wealth, live on your terms.